Why does exchanging $1 give you a different amount of another currency, let's say the British pound, every single day? At the time of making this video, one British pound is worth roughly 1.36 US dollars, but this value is constantly changing and can move within minutes. And it happens to every single currency around the world. One day it might buy more, the next day it buys less. If nothing about the dollar physically changes, then what is actually going on? Every time you travel, shop online, or send money abroad, you are part of a global system worth trillions of dollars. It is called the foreign exchange market, or Forex. But here is the strange part. Most people use it every day without ever understanding how it actually works. Who decides these prices? Why do they keep changing? And how does money move so easily between countries all over the world? In this video, we are going to break it all down in the simplest way possible. Let's start with the basics. The foreign exchange market, or Forex, is simply where currencies are bought and sold. When you exchange US dollars for another currency or convert foreign money back into dollars, you are part of this system. But what most people do not realize is that Forex is not one single place. It works in layers, almost like a pyramid. At the very top are large international banks. These banks trade huge amounts of currency with each other every second of the day. This is known as the interbank market, and it is where exchange rates are actually formed. Instead of physical money being moved around, banks simply adjust digital balances between each other. For example, one bank may need US dollars while another needs euros. They agree on an exchange, update their accounts electronically, and the transaction is complete. This is happening constantly around the world, forming the real foundation of currency prices. You can think of it as a wholesale market for money, where massive institutions trade in very large volumes. Above this system are central banks like the Federal Reserve in the United States. These are not trading for profit, their role is to stabilize the economy. If a currency becomes too weak or too strong, a central bank may step in to influence its value. They do this by adjusting interest rates or even buying and selling their own currency in the market. Moving down the layers, we have corporations and businesses. These are companies that need foreign currency to operate globally. For example, a US company like Apple importing their hardware from their assemblies in China must pay in yuan. To do that, it exchanges dollars for yuan in the forex market. On the other side, a company exporting goods, for example, may receive payments in foreign currency and later convert them back into US dollars. For example, after delivering an aircraft to a company like Lufthansa in Germany, Boeing, a US company, might receive payment in euros. However, since it needs US dollars to run its operations and pay employees, it would likely convert those euros into dollars through the foreign exchange market. This constant flow of business activity creates steady demand for different currencies. Next are hedge funds and large investment firms. These players are not exchanging currency because they need it for daily operations. They are trying to profit from changes in exchange rates. They analyze global events, economic trends, and interest rates, then make large bets on whether a currency will rise or fall in value. Because they move massive amounts of money, they can influence short term price movements in the market. Below them are retail traders. These are individual people trading currencies using online platforms. This is the part most people see on social media or trading apps. However, retail traders make up a very small portion of the entire Forex market. They are operating inside a system dominated by large institutions. Finally, there is everyday life. When you travel abroad, buy something online from another country, or send money overseas, you're also participating in Forex. Even tourism plays a role because visitors exchange their money into local currency, affecting demand. So, what looks like a simple exchange of money is actually part of a massive global network. So, the next time you see exchange rates changing, do not think of it as random. It is the result of a global system where banks, central banks, Companies, investors, and everyday people are all constantly exchanging currencies for different reasons. And all of these actions together are what determine the value of money around the world. If you found this helpful, make sure to like and subscribe for more simple breakdowns of complex topics. See you in the next one.